Hello traders and welcome to another video review. Today is Friday, June 10th, 2022. Let's find out what's happened after the ECB interest rate decision yesterday. The Forex calendar during the London session is quite empty with the medium and high importance events, so it's been completely missed basically on this review, but the New York session looks very busy. First, we will have the data from core CPI from the US and the CPI from the US. As you can see, market participants expect the core CPI to drop 0.1% and CPI to increase 0.4%. Then we have data from Canada, employment change and unemployment rate. They should stay at the very same level in Canada. We got the speech from ECB President Lagarde. She will give a speech at 3:45. At 4 o'clock, we got another data from the US. Michigan consumer expectations and Michigan consumer sentiment data, as you can see here. Then we got some speech again from the German BUBA president, and during the end of the day, we got the US Barker huge recount at 7 p.m. Then we got the federal budget balance at 8 p.m. and then of course data from the futures market, the GB, British pound, oil, gold, Nasdaq, SP500, Australian dollar, Japanese yen and euro speculative net positions will be published online at 9:30 p.m. So this is the calendar for today. As you can see, the New York session looks quite busy. So let's start with the euro dollar, because there is a euro, there is a dollar, and yesterday ECB interest rate decision might affect this pair. So let's find out what's happened. We got no hike yesterday, so as you can see, our scenario for the red arrow, which is this big red daily candle, is working. Actually, we closed below the lower technical support level 1.0628. The close was 1.0612, and today we are just trying to slightly bounce to test the yesterday's technical resistance, and I think we will just reverse lower. We will go towards the level of 1.0472. Of course, this is the last day of trading, so this kind of movement is highly unlikely today, so we shouldn't expect the 200 pips drop. However, you know, everything is possible. The outlook is negative for euro. The outlook is towards the lower levels. We might change even these two technical resistance levels to the red color, because it's now technical resistance. Ultimately, the next target for market participants is at the level of 1.0343. So after the short bounce, we are trending lower. Momentum is already below the level of 50. So bears rule the market, they control the market. What's going on the euro to Japanese yen? Euro to Japanese yen finally is coming off. So as you can see, we got a very big breakout. Our scenario for ABC has not been actually working, because this ABC pattern just completed just early, right? So we got the ABC here, and now this is a 5-wave upward structure, so we can even put it on the screen. I guess we might see this kind of a wave here. So what do we have here right now is a wave top for the wave 3. Let me just put this top on the screen. It will be around the 145. There we go, 144.20. So this is the target. Now we are of course coming off the highs, and we are entering the the corrective cycle in wave 4. So let me just make a little bit clearer for everyone what's going on. This line has been violated. We don't need it anymore. However, we can put some kind of a parallel channel because we want to see the main channel where the wave 4 might be completed, and as you can see, this wave 4 might be completed around the, let's say, the level of 141. So the bounce from the upper channel line is highly anticipated. So these levels here, 139.99, 138.25 and 137.55 are now the technical resistance, support, of course, for the markets. And as you can see, mostly this market is moving higher. The market hits the extremely overbought conditions, reverse lower back into the little bit less overbought conditions, 75 points. The momentum is still very strong, very positive. Sentiment is overall the sentiment is like to buy everything while you still can. So this will end up quickly. This kind of a rally, because there is only one wave here missing to the upside. So we need of course wave 4 to be completed, and then wave 5 to be done around the 146, and then we can assume there will be much more bigger downside correction, downside development. It should be bigger than, let me just find out, it should be bigger than minus 5.22%. This is the closest correction in the of the upper of the larger cycle. So any 5% or more to the downside, and we have a top on euro to the Japanese yen. Let's find out what's going on the US dollar index. Daily time frame chart of the US dollar index extends the bounce for the wave B a little bit higher. So we got the down for the low for the wave A. Right now we just smashed the level of 103.16, which means that this will not be impulsive wave anymore. So right now we can just remove this kind of a line. We got the lows for the wave A in place, so let me just find out what is that level. 101.27 low for the wave A. We continue to the wave B. We need wave C to the downside in order to complete a free wave decline. How much we already retrace here? Let's just find out how much wave B retraced from the wave A. 50%. So 50% retracement has been done. Maybe we will go towards the 60% of the retracement. However, please notice the fact that if the market will break above 103.62 and then 103.90, this technical resistance, euro dollar will likely accelerate to the downside, right? Because the US dollar index would go up then, and our wave C might postpone until we reach the 105 level. Okay, so this is the recent high on the US dollar index. What was the first leg of the correction in terms of the percent? It was, of course, something about minus 3.55. Not too bad for the correction, but we didn't enter the main channel yet. So the outlook remains kind of a bearish unless 103.90 is violated on S&P, on the US dollar index. S&P 500 will be done now. What we are doing on the S&P 500? The S&P 500 doesn't want to rally higher. The boost don't have actually any strength to break above the level of 4,227, which is the 50% retracement of the last wave down. And let's just find out how much we retraced during this down move here during the last bounce. The last bounce retraced about 50%, not yet, but we are getting there. So is the market participants are the market participants ready for this kind of action? Is this what we are building here? Is that the kind of a wave we are waiting for? Maybe, maybe. However, please notice the fact that if 3,955 is violated, then of course we might test the lows from the 20th of the May around the 3,844. This is still the case. This is still the scenario we are now following, of course. So we should wait for the wave A to be completed, and then we should wait for the bounce to the upside in order to complete the wave C. So that's the S&P 500. And last but not least, let's take a look at spot gold market. The spot gold market, as you can see here on this chart, is still in progress of the greater correction. We retraced 50% of this move to the upside. We made a local high at 1,872. However, the level of 1,877 has not been tested yet. The key technical resistance remains here, 1,900, and because this channel is getting a little bit extended, let me just put the tool that will make it a little bit easier for everyone. There you go. This is the current channel. It's the same, just the color is the color has been changed. So the situation is, as you can see, very simple. We should complete this consolidation, break to the upside, possibly around 1,900, and continue to the downside. In that situation, this will be much more complex and time-consuming correction than regular ABC correction. So please prepare for much more longer in time period of a downside downward movement on the gold market. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.